Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for July 23rd, 2020. We're seeing a mixed day today. We had some major earnings releases and they're not really moving the market too much. We're seeing Microsoft down about 2% or so, which if you read yesterday's piece, you'd see that was more or less the most predicted outcome, the highest probability outcome for Microsoft after earnings as predicted by the options market. We also saw results from Tesla. The stock was up pretty sharply this morning and now has fallen back to around unchanged. By the time you look at this, who knows where it will be. They managed to get the fourth quarter of profitability that people were hoping for, that the company was hoping for. A lot of people are banking on the fact that this four quarters of GAAP profitability will allow them to be included in the S&P 500. I think the reason you're not seeing the stock follow through is A, I think that was somewhat baked into it, and B, I'm not quite so sure that S&P will be all that enthused to add the company right now when you look in and see that their profitability is essentially based on selling emission credits to other automakers rather than actually making cars. That probably is not a very good sign for the stock. As I've mentioned multiple times before, it's what I would call a faith-based name. And so the people who keep the faith are keeping it. I don't think you're going to get a lot of new money based on what you've seen from their results. But the Microsoft results kind of show you that you really do need to come in absolutely perfectly right now to get any incremental movement on earnings, because Microsoft's earnings were basically pretty good. The revenues were good, the earnings were good. Market doesn't like the fact that their cloud computing business is not growing as fast as people had hoped. So is that a bad thing? Well, it's not a good thing, I guess, but this is the problem when you get stocks that are so heavily bid up before their earnings. It's tough to get that push over the finish line. And this morning, we didn't particularly get great news either. New jobless claims moved higher for the first time in a few weeks. I think that's the result of the continuing virus problems that we're seeing in many states. That's until or unless that resolves itself, I don't really see the economy doing tremendously better. Leading economic indicators were below forecast. But we had some good news on the fiscal front because actually there was some agreement on the fiscal stimulus package. I don't think it's such amazing news because all it meant is that the White House and the Republican Senate have come to terms to agree amongst themselves. So at this point, maybe now we start to see, hopefully even later today, if not tomorrow, at least some negotiating package coming out from the Senate that can then be worked out with the House. But we remain miles apart. 1 trillion rather to 3 trillion is one hell of a wide market. And so there's a lot that has to be done. And I believe that they're shooting for a week from Friday, but who knows? One statistic I read today, and I wish I could take credit for it, but it was from a strategist at another firm. I did see it on Twitter, and the person is a well-known person, was that essentially the top five stocks in the S&P 500 accounted for about a 238% return over the past 5 years. And the bottom 495 accounted for about a 23% return over 5 years, which really isn't very much when you annualize it. I'm going to flip that number on its head and say that 1% of the stocks have essentially given you all the gains in the S&P 500 because the bottom 495 is 95% of the index if you do the math, right? 5 out of 500 is 1%. Therefore, the other 495 is 99%. Again, this concentration that we're seeing amongst the biggest highly capitalized names has been a winner. If you've been in, you have to wonder how far this can continue to go. Right now, it's tough to jump in front of that freight train because that is what we're seeing. But that's a very fascinating statistic. Speaking of freight trains, gold continues higher, though silver is off its highs a little bit. That had gotten tremendously overbought, and so I don't look to necessarily say that is the beginning of a reversal in silver, but more of a trading pause. Although the dollar continues to weaken, DXY index is lower again today. I think this is a sea change. I think what you're seeing with the dollar is there was never a great reason to be invested outside the dollar, right? It was the cleanest dirty shirt. It was the one place you can get interest and growth. Well, now you can't get interest. You're not getting a ton of growth. Europe actually, for the first time seemingly ever, has got a unified fiscal policy. And so you can really make the argument that it's time to start looking elsewhere. There's not necessarily, at least, if not necessarily moving out of the U.S., there's reasons at least not to be so U.S.-centric. And that definitely puts some weight on the dollar. In one sense, that's good for the multinationals who export because if you're exporting, you want to receive a more valuable currency. Remember, the top stocks in the S&P 500, for the most part, are exporters, do earn a certain amount of their money, if not a bulk of it, overseas. So that definitely should help them a bit. But that's one of those things that it's careful what you wish for. In the short term, a small dip in the dollar is good for the results. In the longer term, it's can be a little bit problematic if people start to really move away from the dollar. So a lot to unpack. Tonight is not the hugest earnings night. We have Intel tonight, but there's not. We start to see more of the other big names coming next week. The S&P 500 will be coming along. For the most part, these companies have been beating, but the expectations have been so beaten down that they're hurdling a fairly low bar. So let's see where this takes us. Right now, the market is kind of meandering. It doesn't really. It does. I get the sense it doesn't really like what it's seeing today, but it doesn't really feel like selling off either because you know what? It hasn't sold off in a while, so why start now? So let's see where the next couple of days take us, and we will talk soon. Have a good one, everybody. Bye-bye.